Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, and in this video, we are going to be bringing you another DWA or risk evaluation, and this time we are looking at MYX Finance, a new project or relatively newer project that has been making headlines because the price of the MYX token is gone up by close to 1,500% over the past 7 days or 2 weeks. So that is crazy if you ask. But before we jump into the DWA or risk evaluation for MYX Finance, please know that this video is not financial advice. If you do require financial advice, please approach someone who is actually trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes, and it's also not meant for UK audiences for obvious reasons. The UK authorities are trying to protect you from losing your funds, therefore you should pay attention to that. That said, guys, if you are not subscribed, please consider subscribing to our channel. We do appreciate your contribution to our growth in advance, therefore please do help us and pass the word around your peers, your family, and your friends. So, bring it all back to MYX Finance. When derivatives exchanges flex too much leverage, people pay attention. But when a non-custodial DEX promises zero slippage perpetuals for virtually any token, uses innovation matching technology, and balloons 90x in a month, that's when the crowd starts leaning in. MYX Finance has become the flavor of the moment, buzzing with speculative energy, impressive growth, but warning signal. In short, it's the fast car of DeFi derivatives, but it does have brakes, or does it? Keep watching if you want to know more about that. What is MYX Finance? Well, MYX Finance is a decentralized non-custodial derivatives exchange, or DEX, built for perpetual futures trading. The idea is to let anyone trade perpetual contracts on tokens that already have automated market maker markets using smart contract guarantees, so users retain custody. It operates across multiple blockchains, networks, for example, BNB Chain, Linear, a layer 2 on Ethereum, BNB, and many others. The core novel piece is that of its matching pool mechanism, or MPM, which is a trading engine liquidity model that claims to enable zero slippage, high capital efficiency, and lower cost. Let's move on to some of the key features for MYX Finance. The first one is matching pool mechanism, or MPM. This replaces traditional order books in part by having liquidity pools that can act counterparty to trades. This helps execute trades instantly without price impact or slippage, especially for small to medium-sized trades. It offers up to 50x leverage on some contracts. It is also non-custodial and has zero registration. This means users can keep custody of their funds, trade, or care via smart contracts. It also offers minimum onboarding, wallet connection, and so forth. No centralized KYC is required for many functions, although regulatory risk exists. Chain abstraction, cross-chain support. MYX aims to lower friction for users across chains. The chain abstract liquidity layer is a feature to unify liquidity, reduce gas, and network barriers. Next, you got low fees and capital efficiency. They tout zero slippage via MPM, low trading fees, efficient usage of liquidity. Also, some gas abstraction or gasless style transactions in some contexts, or reduced friction, though not totally free. And there is also that rapid growth or momentum of the MYX token. Explosive token price moves. MYX has surged manifold over a short period of time, 1,500 over a period of 7 to 14 days. TVL growth, approximately 25 to 40 million TVL in some reports, traction in user addresses, and so forth. Let's move on to value proposition then for MYX. What is it promising to deliver, and what could be the value? Traders can access perpetuals in DeFi style, avoiding custody risks, possibly avoiding some of the counterparty risk or centralized exchanges. If matching pools work as intended, less capital is wasted in spreads and slippage, meaning liquidity providers can earn more and traders pay less implicit costs. There is less friction in deploying trades across chains. Potentially gas arbitration and cross-chain liquidity means less wallet or chain jumping. The token, the MYX token, community rewards, trading volumes, and so forth mean early adopters may gain outsized benefit. Let's move on to use cases then for MYX Finance. Traders are seeking leveraged exposure or perpetuals on tokens that are typically only on automated market makers. Liquidity providers who want to supply liquidity but expect better usage, returns due to better matching and less slippage. Projects wanting derivatives listing for their tokens without having to go through centralized exchanges, and users can also seek derivatives trading in a more transparent, auditable, and non-custodial way. Now, as part of our risk evaluation, guys, we do apply our 13 elements in decentralization, security, scaling, interoperability, the project team, social media presence via X, formerly Twitter, as well as via Discord. Then we look at the use cases and the tokenomics, which also covers token allocation. Let's start with an approach we're going to apply for decentralization allocation, which is looking at strengths and weaknesses for MYX Finance. Strengths: it is non-custodial. MYX does not hold user funds. Its smart contracts users retain control. Community allocation appears partly oriented toward community rewards. Tokenomics include a large portion for the community. As for weaknesses, the token supply allocation, large parts go to the team and advisors and institutional investors. They are talking of 20% each, which introduces risks of centralized influence. Some concerns and claims about manipulation or CBIL type behavior in airdrop and launch. Some analysts have flagged that at least 100 wallets funded via OKX before the MYX token airdrop with similar behaviors. These kinds of coordinated early gains may indicate insider advantage, so that's something to be aware of, especially for those aping in now when the price is already 10x and above. Liquidity appears still modest compared to established derivatives platform. This can concentrate risk of large holders or early LPs influencing price or governance. I think if you look at the amount of tokens that are in circulation and also the volume or daily volumes, that will give you an indication of whether there is actually price manipulation at play here. Let's move on to security of the protocol and use our investor funds. This is what we know. The platform claims smart contracts non-custodial security. Funds don't go through centralized custody. The rapid growth has triggered many liquidations, more than 40 million liquidated during price surges during a space of a week or so, showing both opportunity and risk. Thin liquidity leads to high slippage and possible manipulation. There are criticisms and allegations that the airdrop was manipulated. Insiders accumulated a lot via OKX. These are all red flags as per on-chain analysis. What is less clear though is that there are no independent and or high-quality audits. To date, I haven't come across anything that is widely published to say the smart contracts were audited by the likes of PeckShield, Cetic. If I missed that, guys, let me know in the comment section and correct me. Details on insurance or protocol level protection against hacks or insolvents are less visible. It's quite important for these perpetual DEXs to have that in place. Let's move on to interoperability with other networks and protocols. MYX Finance is live on multiple chains. We're talking about BNB chain, Linear, OPBNB, among others, which gives it an element of cross-chain reach. The team is also working on chain abstraction liquidity layer to unify liquidity across chains. This, it is hoped, it will help prevent fragmentation, reduce arbitrage or inefficiencies. As far as scaling is concerned, can it handle high traffic or heavy traffic? Potentially yes, but with some risks. The MPM design is meant to reduce friction and slippage, which helps in scaling, especially under moderate or heavy usage. If matching pools work well, they can handle many trades without new trade pushing price wildly. The cross-chain architecture helps spread loads, reduce gas bottlenecks where one chain is congested. But rapid price surges, you're talking of 90x in a short period of time, show that liquidity is still thin in many pairs, which can lead to dangerous instability when large trades or speculative farms happen. Thin liquidity plus high leverage equals risk of cascade liquidation, which then explains potentially why we had that 40 million liquidation when the price was pumping up. Who was trying to short that? Some people. As far as the project team, only the CEO is publicly listed on some public platforms or channels. There is no information readily available for the rest of the team. Social media presence via X, formerly Twitter, we are talking of just over 170,000 X followers, and on Discord, just over 37,700 Discord members. Moving on to tokenomics and distribution, ticker symbol MYX. Maximum supply is sitting at 1 billion MYX tokens, circulating at the time of recording, 157.75 million tokens in circulation. I think it's approximately around 190 million. Well, it's going to be between that, isn't it? 157 to 190, somewhere thereabouts. I think that's where the figure is. Token allocation, community rewards 45%, team and advisors 20%, institutional investors 20%, initial liquidity 10%, reserve for future and protocol treasury 5%. So you can see most of this is insiders apart from that 45% community reward. The fundraising managed to come up with 10.18 million, which included seed rounds and so forth. Price market data, well, the fully diluted value of FDV stands at approximately 1.2 billion, given total supply when priced at $1.20, but now its rapid recent price meteoric rise from tens of cents to over $10 to $16. I think at one point it topped at about $19 within a short period of time. Insider token allocation, according to our own analysis, stands at 37.5%. I think it could be taken as a range, 37.5 up to 60%. You want to consider some of the things we're talking about. Anyway, so that's where we are as far as MYX Finance is. Where the value might be for users, where we got early movers in MYX may benefit from huge upside if the project scales well. Traders will be drawn to low cost, low slippage perpetuals, especially for less common tokens. Liquidity providers may find returns, that is fees plus rewards, attractive relative to other DEXs or staking options. Token holders tend to to gain if MYX, the token, becomes a leading perpetual derivatives platform, governance rights, token value, and appreciation. Now, I must also bring to your attention Hyperliquid, which is a competing product alongside MYX Finance. I think the idea behind whoever is pumping the price, they want to bring it to the same level, or they want to hoodwink people to think it could actually go head to head with what Hyperliquid is doing. But I think Hyperliquid is wired differently. If I'm wrong, guys, let me know in the comment section. So is MYX Finance authentic, or is a Ponzi? On a scale of authentic to Ponzi, MYX lands somewhere moderately authentic, but with the heavy speculative overtone. It has real technology or real tech innovation, real usage, real tokenomics, and non-custodial architecture. But it also has red flags, extreme price moves, concerns about airdrop fairness, simple valuation that seems super strange relative to underlying TVL and liquidity. Those are my thoughts on MYX Finance. Now let's move on to the scaling part, where we are going to be scoring the 13 elements from 0 to 10, 0 being poor or the worst, 10 being the best or maximum. And a quick rundown of those 13 elements: you got decentralization, security, scaling, interoperability, project team, social media presence via X, formerly Twitter, as well as via Discord, age of the project use cases, tokens issued at project launch, total tokens in circulation at the time of recording, maximum tokens available, as well as insider token allocation. To kick us off is decentralization, 5 points out of 10, security, 2.5 points, scaling, 7.5 points out of 10, interoperability, 5 points out of 10, project team, 5 points out of 10, social media presence via X, formerly Twitter, 7.5 points, via Discord, 7.5 points, age of the project, 2.5 points, use cases, 7.5 points, tokens issued at project launch or TGE, 5 points out of 10, total tokens in circulation at the time of recording, 2.5 points, maximum tokens available, 5 points out of 10, and insider token allocation, if you go for the lower end of that scale, 2.5 points out of 10. So those are the scores we've allocated to MYX Finance. Guys, do you agree? Let us know in the comment section. Aggregate score for MY Finance comes up to 65 points out of 130, which puts MY Finance within that second lowest category, which is could go to 0, which covers almost all or majority of the projects we've reviewed on this channel. They could all go to 0, because even some of the best protocols or layer ones, under a specific set of circumstances, they could still go to 0. That's something to keep at the back of your mind, guys. Anyway, do you agree with what you just covered here in the scoring part? Let us know in the comment section, including the aggregate score of 65. I mean, if you compare MYX Finance to the likes of Sin Finance and Avo and Hyperliquid and many others, I'm not sure about the volume, and especially the trading volume, and also the volume being traded in terms of the price. I'm not sure about that. I mean, if you guys know any better, let me know in the comment section. I currently do not hold a position in MY Finance. I could have caught the lower end of it after it launched. I think I first noticed it when it was around $2 or somewhere thereabouts, but then I thought it was overpriced. But when it went to 10 and it kept going up to 19, I mean, you could start feeling you missed it. But with most of these things, you better not chase it, because if you do, you're gonna get dragged. Therefore, I did not jump into MYX Finance. I do not intend to, because I've got my own positions in perpetual DEXs and future DEXs and so forth. I think I've got 3 or 4 in my portfolio. Any thoughts, guys, about our review here? Let us know in the comment section. Until the next one, FD for 65.tv signing out for now. Bye.